welcome to ATFX's Bank of Canada rate decision preview. One of the things that we're looking for is, like, to a certain extent, the Bank of Canada is a little bit like the canary in the coal mine at the moment, because it was first off in the of the major central banks in the easing cycle a few months ago, and we have had following from since then from the ECB, the Bank of England, and anticipation, of course, from the Fed just in a couple of weeks' time. Now, a lot of anticipation for another rate hike from the BOC. And we've seen some decent moves in the market as well. We've also got key data coming up this week, which will probably supersede the Bank of Canada as soon as that's out of the way. And that's the employment numbers that we've got in the US. We can't talk about anything this week without looking at those employment numbers. There are 4 separate jobs numbers coming out this week, but the most important by far will be the non-farm payroll, the non-farm payroll trifecta, which includes average hourly earnings, the non-farms, of course, and the unemployment rate. So plenty of factors moving along there. I'm going to skip over to our Canadian dollar charts, the longer term one. Obviously, we're looking at interest rate differentials here, so we're going to be looking at the daily chart. So here we go. This is dollar CAD, and as you can see, it's the daily chart, so it gives us a longer term view all the way back from these lows, back Q2 2021. All this sort of post-pandemic moves that we've seen, interest rates come back stronger from central banks looking to combat inflation. And now we're seeing the reverse of that, I suppose, with central banks across the globe looking to ease rates. And as I said, Bank of Canada, one of the first off the rank, and leading the way for some of the others. And I think that's something we're trying to look at as well. You know, if they go, does that put pressure that we see the ECB, we see the Bank of England, but certainly the Fed is something that we're looking at. And let's be honest, the Fed's probably the leader in these circumstances, but some of these central banks have had to get ahead of the way. So just from a currency trader's perspective, we've seen a really good move recently down from this sort of like 139.50 level all the way back down, like that's four and a bit big figures, down to the 135 level. And we're just sitting on just above recent lows. Now, expectation is firmly in the 25 basis point cut camp, similar as it is for the Fed, to be honest. So if that comes through, we're not expecting to see too much of a move in the loonie. But if we did get a surprise, either no cut, well, that would see a sharp appreciation, would see these levels broken fairly quickly and then challenging back to these levels down at 131. But if we did see that 50 basis point cut, then you would see a move back into these recent ranges. Don't get me wrong, what we'll then be looking at, you'll see a knee-jerk reaction. We'll then see some accumulation of CAD positions over the next few days, but then attention for especially in this pair, especially in the dollar CAD, will move over to the Fed. I think one of the interesting things, where there will be opportunities for the CAD on the crosses, so where you're looking at interest rate differentials against the ECB, probably against the Bank of England, all thought to be in easing cycles, one could go quicker than the other, and this could be the first one that we see something moving on. So interesting times ahead. At the moment, 25 basis points, I don't see it deviating too far from the ranges that we've seen recently. I don't think we'll see a massive reaction. We've got these bases just down here, just under 134.50. We're trading around 135, the figure at the moment, and there is some options interest around there, which has kind of kept it pegged for the last few sessions. Any surprises? Now, once again, as usual with most central banks, the surprise or the forward guidance may be what takes us slightly away from our expectation. So most likely we're going to see more data-reliant calls from Tiff Macklem, the Bank of Canada governor, and that's where we might see some more fluctuations in the move. So once again, anything slightly more hawkish, buying CAD, selling dollars, will challenge these 134.50 levels, and that could accelerate a move down towards these 133, 132 levels. Anything more dovish from him, and that there's a possibility that could happen. I'm just going to adjust this line here. It should take us back into mid-range, but don't forget, for the loonie, the real data, the real move will probably come after non-farm payrolls, and how that looks to affect the Fed side of the equation, whether we get 25 basis points in a couple of weeks' time, or whether we get 50. So good luck trading out there. And if you need anything from us at ATFX, please do contact us. Thank you very much.